Good evening, ladies and gentlemen. Let's go ahead and get airborne. Options Weapon School. We're going to do some vertical spread training tonight, and it's a good topic to be talking about with everything that's going on in the market. A couple announcements first. I unofficially, I guess, yesterday opened up our 25 annual slots for Options Weapon School. Let me show you where that page is. How did I unofficially do it? Well, in yesterday's replay, I actually put the link all the way at the bottom of the post, and I said, if you scrolled this far, you're pretty damn motivated. Rick, here you go. Here's the link, folks. And let me explain the Options Weapon School program for you. So folks who are ready to grab their slot, like I said, we're only opening 25 slots. If we have some left over, maybe tomorrow or Friday, we'll try and fill those with people who are interested in month to month. But here you go. Here's Options Weapon School. There's two paths. Options Weapon School right here on the left with this big green button is the primary live trade brief, which you got yesterday. The 8 training sessions, which I'm giving you a sample of tonight, and also the urgent alert service. Now, this button here on the right, you can get Options Weapon School plus the weekly options live trade brief, which is every Monday at 1 o'clock. Now, I know we haven't done weekly options yet. That's actually tomorrow at 10 a.m. So we'll talk about that then. But a lot of people email and support trying to get their slot right now. So go ahead and you guys should be seeing my screen. How about now? Yep, there we go. Awesome. So here we go, folks. There we go. So here's the big green button on the left. Here is the Options Weapon School annual, and like we talked about, like I said, we're doing weekly options tomorrow. But let's take a look at our weekly options trade from last week. And this week, what I do, we talked about volatility, folks. We're going to talk about volatility tonight, but this is finally volatility is back, just as we predicted. And I'm really looking forward to it. So here's our weekly options trade from last week. It was an Amazon bull put spread. So here you go, folks. One trade. This was our Amazon trade last week. So let me show you. One trade last week, right there. It expired Friday if you took it all the way to expiration for a $1,500 gain. That was a max profit in 4.5 days of $1,500. So let's do the math real quick. That paid for a full year subscription into our Options Weapon School and weekly option service. Okay, so this is, I'm not going to spend too much time marketing because it should be selling itself. I mean, we had people Monday night during the in-brief asking how to sign up. That was pretty cool, and I hadn't even talked about trading yet. Here's the replay page, folks. The primary live trade brief from yesterday is on there, where we talked about ExxonMobil, Tesla, volatility, and the welcome aboard brief is on there as well from Monday night. Rick's already in full throttle and enjoying the profits. Awesome, man. Awesome. And here's the you can click on the green buttons on this page right now. And again, folks, this a couple motivated people who saw the link yesterday got their annual slot. So I think we're down in the mid-teens, maybe 15 or 16 slots remaining. Like I said, if we don't fill up all annual memberships by tomorrow-ish, I'll go ahead and make some month-to-month slots available. Okay, but everything's on this page. What you're going to get: the primary live trade brief. There's the description, the weekly option service if you want to learn how to trade weekly options, the urgent alert service, and then here's the 8 training sessions that you're going to get access to as well. And tonight, like I said, I'm going to give you kind of a sample training of what you're going to receive. And also Maureen, I think Maureen was in here Monday night. She said, hey, is there a manual or stuff where I can really learn the basics? That's what you're going to learn in here, folks. Here's the long and short calls and puts, covered calls, cash secured puts. So we take a building block approach here to our training. Same type of training that can take somebody who's never even seen an airplane before in a short amount of time, turn them into a steely-eyed killer off the front of an aircraft carrier. That's the same training you're going to get here. But here's the manuals. You get your primary workbook, intermediate workbook, and then you should have a copy of your OPCL already because you registered. Okay, so if you have any questions or concerns, we do have customer service standing by right now. So if you have questions, I don't know, I should be able to answer. But there's the number 754-300-1084. or you can shoot us an email, support@topgunoptions. So officially the doors are open, and it's go time. So who's that? Calvin from Cape Verde or something Verde, Arizona. So just got an Options Weapons School annual with weekly options. Every time it's like what's that? It's a Wonderful Life. Every time my phone buzzes, an angel gets his wings. So that's what's happening here. Okay. Now, before we do any sort of training, folks, whether it's in the military, we never did any sort of training without a real world example. We never just said, hey, let's start talking about this tactic with no tie to the real world. Matter of fact, every military, maneuvers or training actually had a tie to the real world. There's 3 carrier strike groups in the Pacific right now off North Korea doing, quote, exercises, and I guarantee you their real world exercises are talking about North Korea. So same thing tonight. So let me give you a quick strategic and operational brief. Let me remind you of what the rest of the flight schedule is. Like I said, so we did our intro Monday night at that was actually 7. We did the primary live trade brief yesterday morning at 10. Tonight we're doing vertical spread training, and I just opened the 25 slots. I opened them yesterday for those that were motivated. You had to see the link. And then tomorrow morning at 10, I'm going to do a weekly options live trade brief. And then if we have any annual slots that haven't gone, I'll go ahead and open those up to monthly folks as well. And then I was going to do my video trade alert today, my urgent alert. I was going to send it out, but the president had me hanging on what the hell his announcement was going to be. And I just sat here, and it was a non-announcement. It was talking about what he had done overseas. So I thought it was tax reform, and that's definitely in danger. So we're going to Tudor, very good. Rick, steely-eyed killer back on the back end, takes more training and practice, as does options trading whiz. You've got it, and I appreciate it. Thanks, Rick. Tudor, why only 25 slots? Because I can't, as an instructor, I can't stand a zoo. As a businessman, I'd love to have a couple thousand people in the Options Weapons School program. We don't do that. Okay, as I've showed you throughout the week, as of me speaking right now, we have nearly like 9,000 traders and investors opted in to this webinar series. I don't like a zoo. I can't. When you join Tudor, you'll see that I don't leave a live trade brief with any hanging chads. Nobody asking a question, or as an instructor. Whoops, I forgot to plug in my computer. That'd be bad. So as an instructor, I don't leave anybody hanging. So if it's a zoo, if we have a ton of people in these live trade briefs, it gets ugly. So we only do Options Weapons School or Full Throttle a couple times a year. It's not consistent. It's not ongoing. We only do this when we have room. Does that make sense? It's a very tight-knit squadron. Fish, we only want the best of the best squadron mates. Exactly, Fish. That's exactly right. So that's why 25 slots. We'd like to keep the squadron nice and tight, and we can't have a zoo. Does that make sense? Reginald, yeah, you bet. I'll go back to the page. So the link should be in the chat box, folks. So here's the link to grab your slot. So you can take a screenshot, sure. Brian, no snowflakes. Exactly. So the link is right there in the chat box. So hopefully everybody starts grabbing their annual slot today or right now. Or give us a call, 754-300-1084. Oh, Stephen, it does? Where does it say that? It should not say that. Where does it say 50? I got to Skype my techie. Where does it say 50? It's not. That's incorrect. Wherever it says that, that's wrong. I'll email my techie. Real quick, before we get airborne, I got to take a proud dad moment before I go to work. So my son got into Norwich University today. It's the Military College of Vermont. They have a hell of a hockey program. So that's my boy, Matthew. Obviously, that's not him today. 17 years old, senior in high school. He got into Norwich University. So I'm very, very happy. He's going to go through the NROTC program, and couldn't be more proud or happy for him. He deserves it. He's been busting his ass. So I put that on Facebook, and he's already giving me crap about it. Down here, where is it? Oh yeah, okay. Yeah, I'll get rid of that. It is not 50. That's wrong. It's 25. I think back in the we only open as many slots as we have room for, folks. So I think the last time we did it, maybe we had 50. Now there's only now there's that many. Thanks, folks. I appreciate that. Yeah, I had to. That's a proud dad moment. Okay, I think we're good to go. I don't think I have any. I'm not a slide guy, folks. You know that. I want to. So here's what we're going to do. The 25 annuals, I'm going to do a quick strategic and operational brief. Like I said, we never talk about any training without a real world application. And we'll take a look at some trades. Probably, I don't know if I'm going to do the double vertical tonight. I might do that either tomorrow or in our bonus video. And then before we leave, I'll go ahead and brief you how many slots we have left. My phone just buzzed again, which is another angel getting its wings. All right, that's enough of that stuff. Let's go. We've covered extensively what's been going on strategically around the globe. Obviously, potential war in the Middle East is simmering on the back burner. We know the 3 carrier strike groups are off of Korea, and I've landed on each one of those beautiful ships. Charles, if I purchased full throttle in September, can I attend? Just completed deployment and was not able to utilize it up until now. Charles, yeah, I just shoot an email to support and we should be able to hook you up. Yeah, just support at Top Gun Options. So if we'll probably hook you up there, but if, for other folks, it's only $195. So who just got this one? Steve from Singapore. Steve is from Singapore. Steve, welcome aboard. There's a weekly options and an annual. So love Singapore, man. That was pulled into there on the Lincoln and the Kitty Hawk. It's awesome. Love Singapore. Okay, so and then the president today, obviously trying to do a victory lap in his press conference about huge stuff that I got accomplished overseas. He got 3 shoplifting UCLA students out of jail in China. They could have been in prison for about 10 years. That would have sucked, but he did it. He got them. It's pretty cool. And then he kind of said that he's like, is anybody going to thank me for doing that? And then there was a forced press conference later today from the basketball players, grudgingly saying, "Hey, thanks." Yeah, Harry, and then, the Democrats today, like 5 of them coming up with articles of impeachment. I mean, do they really, are you rooting for your country to fail? I mean, how do you root against somebody? Even when Obama was president, I'm not rooting for the country to fail, man. I live here. I don't want to die. Martin from Diamond Bar, California. Welcome aboard, Martin. That's a Options Weapons School annual with weekly options. I have no Diamond Bar, California. I have no idea where that is, but welcome aboard. There goes another one. So, folks, I don't know if I'll have any monthlies left. So here we go. This is what's going on, folks. Yeah, North Korea. Yes, potential war in the Middle East. I predicted this last week, folks. Let me get the SPX up here, not Dow Industrials. So look at this. Last week I said, you know what? I think the market's going to sell off and it's going to inoculate itself against the tax reform failure. Now the Republicans have snatched defeat from the jaws of victory because they're trying to tie the tax plan to repealing the Obamacare mandate. I mean, this is awful. It's stupid. So the odds were slim to none that he was going to get tax reform passed, and slim just left town, and now we're looking at none. So. And Mitch McConnell, this dude's part of the problem. He's been in the Senate for, 30-some years? If you've been in the Senate for over 3 decades, you have no idea what the hell's going on in this country, period. And now they're trying to throw uh, Roy Moore under the bus in Alabama. What a complete shit show in Washington right now. So the market's starting to wake up to a little bit of, you know, it's, you know, we're starting to see risk return to the market, which is awesome. We had some weak China data the other night strategically that helped us pull back a little bit. We talked about some JP Morgan issues. I'm going to talk about Amazon. This is awesome. Amazon slashes whole food prices in round 2 of the grocery wars. Now we know, what was it, a month or 2 months ago? Amazon, he's going the Carnegie route, isn't he? He's going to buy or build his own FedEx. He's going to buy these grocers. I mean, it's just Jeff Bezos is taking over the world. So love Amazon. I showed you the weekly options trade from last week that made $1,500. That paid for your annual subscription. So all the people who just grabbed their annual, if you were here last week, you'd already be done. You would have already paid for your membership with one trade. Yeah, the 2-hour delivery, Brian, it's getting creepy now. You can let them into your house and all that type of stuff. So let's take a look at a tactic. So let me pull up Amazon here. So everybody should have their trade plan out right now. Okay, step 1. I'm going to tell you my strategic mindset. Even with a chart looking like this, kind of melting, this is orderly, folks. This isn't panic selling yet. This might be the 3 to 5% sell off everybody wants and has been hoping for. It doesn't feel like it. There's nothing to say that we don't accelerate tomorrow or the next day. Or I honest to God thought the president's speech tonight or this afternoon was going to be hey, we tried, it's not going to happen. But apparently they think they have enough votes and they're going to bring it to the floor. But folks, this is it's orderly. We might get down to the 50-day, but every time we've either smashed the 50-day in the past or hit it, it's been a rip your face off rally. Remember this one? We smashed through it. This is on, President Trump's a neo-Nazi racist and Steve Mnuchin and Gary Cohn need to resign. We hung underneath the 50-day and then we just have never looked back. So we have dueling volatility trades on in a couple portfolios where we're long volatility and we're also short volatility. With volatility, you want to be early. Maybe tomorrow I'll cover the bearish double vertical or a brand new bearish double vertical on volatility because it's time. As vol starts rising, remember, folks, volatility goes up on what? Uncertainty. So, this is a nice orderly increase in vol, a little bit of a gap today. I think it's really starting to hit the market that we might not get tax reform, but it's going to happen eventually. Okay, so these have been nice trades. So we have a long VXX bullish double vertical out to, I think, the beginning of December. That's very, very profitable. And then obviously the bearish double vertical I put on the other day is, taking a little bit of a hit, but that's why we have dueling trades on at the same time. You can be long vol and short vol at the same time and still make money on both of them. So, but let me go back to Amazon. So everybody should have their trade plan out. So this is what we're going to do. Let me go back to the main page here. So there's going to be 8 options weapon school sessions, and they're right here. So I'm giving you an example of session number 4 right now. All these sessions are about an hour to an hour and a half where I go into each one of these tactics in detail. So in addition to the manuals that you're going to get access to where you can read about all this stuff, we're going to do this is your aerodynamics book, right? So you're going to read about aerodynamics. Then I'm going to give you a training session on that tactic, and then we get live in the markets in the primary live trade brief or weekly options, and we start trading. Okay. So it's that whole demo do approach. So step 1 in our trade plan, what's my strategic mindset? Even though it looks like, we should be bearish here, I'm not. And for those of you, as you're signing up right now, you're going to get to know me a hell of a lot better. I'm a perma bear. I just think, this thing, we're heading lower, or we should be, but we have, near zero interest rates, semi-decent earnings, good jobs numbers. I want a 3 to 5% pullback so we can get back in. It's good, but exactly. So I'm kind of neutral. I'm market neutral right here. to maybe a little cautiously bearish. So that's step one in our trade plan for our training session tonight. Is my strategic mindset is market neutral to cautiously bearish. Okay, so not full on, hey, this thing's rolling over. This is not the Fred Sanford. This is not the big one. We'd see a lot more. We'd see, we'd see a lot of this, and we're really not. It's just kind of a lazy sell-off. It really doesn't appear to be panic yet. So step two is to identify the target. The target for tonight's training is going to be Amazon. We've traded Amazon since the earnings report. Look at this chart, man. This is, you want to copy and paste this and put it in your trading notes. So here's the earnings. If everybody remembers what happened with Amazon earnings, I mean, just a gap move to the upside. Here's about half the gap. Okay, so when a stock makes a gap move like this, if it doesn't pull back to, if it doesn't fill the gap, right, or at least half of the gap, it's very bullish. I haven't seen a bullish chart like this in a long time. So rip your face off rally. Is this for real? Hell yeah, it's for real. And then this is very, very bullish up here. And, after hours, we're up a little bit. In today's market, when we were, selling off at one point, the SPX closed down, what's that, 14? Amazon held up just great. These Apple, Amazon, these stocks are so big, folks, that they have their own, they have their own volatility indices, one of those. So this is pretty cool. It's its own economy. That's exactly right, Brian. There you go, Harry. So here we go. Step three is commit criteria, and I just gave you a little bit of it. Step three is a very important part of our trade plan process, and you should think the trade plan's still in here under the handouts. Yeah, so if on the right side of your control panel, folks, there should be a little, it says TGO trade plan, one-page PDF. You can download that and kind of follow along with me. So here's the tactic we're going to look at. The commit criteria. After earnings, the gap move on earnings, Amazon failed to pull back and fill the gap and has held steadily. As technically, it's very, very bullish. It's also bullish that he's starting to do this. Amazon, Whole Food used to be the place in Boca where the women go in their Teslas with their Lululemon pants that have never seen the inside of a gym, and they love paying up for, vegan, non-gluten, whatever stuff. So Jeff Bezos really is working on a take over the world plan. So I am short-term bullish for technical reasons and also fundamental reasons. And we're actually going to go out a little bit on this trade. So that's step three. That's our commit criteria. Now let's get into the tactical employment. Okay, tactical employment means how am I going to put this trade on? So a bull put spread, and you're going to learn that, folks, I call the tactic by what my strategic mindset is for the trade. I could call this a credit spread, and that's one of the, I guarantee if you're new to options, you might be sitting there like, what was one of the most frustrating things is that a tactic is called three different names. Well, I get that. All three names are correct, but I like saying the tactic direction. Okay. It is, Raymond, it's called a bull put spread. Okay. So let's pull up the options chain, and I'm actually going to go out. This might sound a little crazy, but it's not. I'm actually going to go out about a month. I'm going to go out to regular December expiration for this Amazon trade. Okay, so December of 17. Taking a look at it doesn't reset these settings. The 1100. Let's just take a look at this. Let me build this together. I looked at this before market close, but not. Let me just that 1100. So give me 1 second, and then I'll be right back, folks, because I want to build this. Wow, $5 wide. Maybe 15 of these. Perfect. All right, so here we go. Everybody, here we go. So this is the tactic. So I'm on step 4 of our trade plan, the tactical employment. So I'm going to sell. Let me grab my little red ball here. I'm going to sell 15. Why 15 contracts? Give me 2 minutes, folks. 15 of the December 17th expiration. Why December 17th? I want to give this trade a month to work. Okay. I think we might see a little bit of a continued pullback. If you do think that we're going to pull back a little bit, maybe you hang on or wait to put this trade on. But to be honest with you, looking at the chart of Amazon, it hasn't even in the past week and a half of the pre-tax failure inoculation with the market going down, Amazon's held up pretty strong up here. So I wouldn't wait to put this on. I like this one. So I'm going to sell 15 of the regular December 1100 puts. Why did I choose 1100? I just showed you on the chart that that's kind of the most recent support level is right there around 1100. So me selling 15 of these 1100 puts means that hey, Amazon, by December 17th, I think you're trading at least at 1100 or higher. Okay. When I sell a put, I am bullish. Okay. So, and this is what's awesome. Let me just switch over to here real quick. This is why you're an options trader, or if you're brand new to options, I'm going to teach you how to do this. Let me answer some of these questions towards the end, guys. I want to get through. I'll answer some of the membership questions at the end. So if in doubt, grab your slot now because I don't even know if we'll have monthlies tomorrow. But folks, this is why you're an options trader, or if you're new to options, you're going to love being an options trader. Is look at this. This trade makes money 3 ways. You see this blue line right here? This is Amazon. This is the current stock price. So Amazon could go up. Well, we want it to go up. That would be great. So we make money if Amazon, that blue line goes to the right. It goes up in price. We make money, folks, if Amazon just sits here. Let's say Amazon continues to do what it be doing and just kind of hangs out here. Write this wizism down. You should have a lot of them so far. Unched on the day equals time decay. Okay, so unchanged on the day equals time decay. Remember, this is called a bull put spread. Okay, this is also called a credit spread. You see this right here? We're getting paid to do this trade. When you sell something, folks, whether you're the Ferrari dealer down here in Fort Lauderdale or you sell your house, or when you sell something, you want it to go down in value, right? So if somebody in their midlife crisis comes into your Ferrari dealership and peels out with their $250,000 midlife crisis, they get halfway down the block and their significant other calls and says, hey, your midlife crisis is over, take the car back. Well, of course they're going to take the car back for about 200 grand, even though you just paid 250 for it, because it's theta, it's time decay. So we make money if Amazon goes up, right? We make money if Amazon just sits here. This is why you should never trade another stock in your life, folks. Buying Amazon stock, besides mortgaging the house, you make money with the buy, hope, and pray method. You can make money 3 ways in stocks. You buy it, you hope, and you pray. Not us. Amazon can go up. Amazon can hang out where it is, or Amazon can even go down a little bit as long as we stay above our break even. So 3 ways we can make money on this trade. The only way, one out of 4 that we lose money is if Amazon implodes and heads through our long put. So I beat that horse to death with the short put, selling 15 of the December 1100 puts. That's me saying, hey, Amazon, you're definitely not going to be below 1100 by December 17th. Wiz, what if you're wrong? Jeff Bezos, I don't know, press conference in 2 weeks, it turns out he's the Antichrist or something. I don't know. And Amazon decides to implode. Well, that's why we're doing a spread, okay? I'm buying 15 of the 1095 puts. Now, somebody just had a good question. I will answer this one. And this is why a perfect example, folks, of why we only limit it. That page is wrong. It is not 50. It's only 25, folks. because there's a ton of great questions flying in here. And, in my regular options weapon school classes, when we teach this tactic, we'll sit in here for an hour, hour and a half, and I'll answer everything, folks. We'll grab a glass of wine and we'll sit here and talk about this tactic. But the one question I will answer right here. Somebody said, hey, Wiz, could I do the 1100 1090? Of course you could. Bigger spread, so bigger potential reward, right? The options market isn't stupid. It's been here for a while and it's very optimized. So if you could do a $10 wide spread, well, yeah, Wiz, I could make a hell of a lot more money, and you could lose a hell of a lot more money. So that's the F-18 pilot in me. The options trader in me is always, you might look at the good. I'm going to teach you here at Top Gun Options to always, always look at the bad. So in case Amazon does implode below 1095, we bought these puts and we're hedged. Okay, so this is a spread, and it's a credit spread right here. Now, $1.45 is mid market. I try and get filled on this trade tomorrow. Obviously, we're looking at after hours pricing and all that stuff. I'd look to get filled on this trade plus or minus probably about 10 cents, meaning I'd go down to a credit of $1.35 or up to a credit of $1.55. Anything outside that kind of 20-cent net range, it's either too cheap or too expensive for me. It's a little too rich for my blood. Maybe I roll the strikes or something like that. But let's learn this. I'll give you a visual. Right now, I'm going to turn into a Catholic nun, right? So I know that's a disturbing visual for you. What do I mean by that? When I click on the snapshot button, I'm going to become Sister Mary Matthew Buckley. Get the ruler out. Exactly, Brian. So when I click this snapshot, I want you to look at one place and one place only, and that is max potential loss, the sad face, at least on this platform. And like I said, I am heading over to TradeStation. I'm wading through the compliance process. But if you're interested, I can give you the name and the phone number of my guy at TradeStation to help you get over there. But anyway, we always look at max potential loss first. Why? Folks, you don't ever look up here first. You're an average retail tactical trader if that's where your eyes are drawn to. How much can I make on this trade? Well, who doesn't want to make $2,200 in a month? Annualize that, folks. 12 times 2, and yeah, that's some pretty good living, isn't it? So, yeah, Fish, it's Mike. So the max potential loss, that's what you have to look at first. And based on a $100,000 model portfolio, one of my rules of engagement, or my SOP, standard operating procedure, is I don't want to risk more than 5% or $5,000 on any one trade. That's me, folks. That's nearly a quarter of a century of doing this. That's the number I came up with. You might be 2.5%, you might be 10, you might be 50, and that would be stupid. You know what I'm getting at, folks. You have to come up. It's very frustrating to me to bump into traders on the road and be like, hey, Wiz, I'm in this Amazon spread and it could make $2,000. The first thing I ask them is, how much can it lose? And if you're not comfortable with potentially waking up and just being out that amount of money, then you do less contracts, okay? Like I said, you guys are getting the eavesdrop over my shoulder and watch what a former retail trader turned pro-am is doing. Okay, what you do on your side of your computer and your bunny slippers is between you and your RIA, right? So, yeah, Andrew, you could do this. And again, folks, this is based on a $100,000 model portfolio. And to be honest with you, I'm not using that full $100,000. It's not deployed all the time, folks. That would be smoking crack. We're not doing that. So at any given moment, I'm only deploying out of the $100,000 model portfolio, maybe, about 40 to 50 grand of that. So yeah, you could, let's do one contract. Let's just see, what that turns out to be. Risking $355. So, again, Andrew, I can't give you individual investment advice, but for an account that size, maybe you do, I don't know, 2 or 3 contracts. and you're risking $1,000 to potentially make $435. So, folks, you can trade a small options account. That's the beauty about options is we have what? It's called leverage. Leverage is awesome. So leverage is a good thing, but obviously leverage cuts both ways, doesn't it? So, okay, so let me go back to, let's go 15 and the original trade here. So, as I said, we make money whether Amazon goes up, stays where it is, and can even go down a little bit. So using current as of the market close, at the money volatility, and I'll teach you all these concepts and at the money volatility and all that stuff. It's just rolling off my tongue here because we got to move. There's a 67% probability of making $2,200. Tudor, I can't give you that answer. Tudor said, hey, what's the minimum account size recommended? I don't know. I just showed you, again, you could trade, you could do this, if you have a smaller account, you do one contract. You risk $355 to make 145. Until you build up a nice little war chest, I can't tell you what. See, that's why at the beginning of the webinar, folks, I say, hey, this is training, and if you are going to trade real capital, you probably need to go to lunch with your buddy who's an RIA who knows your tutor your exact risk parameters, how much you're willing to risk, and they know your mission objectives. Yeah, Tudor, absolutely. With that size account, you absolutely can. Okay. Brian, Raytheon was not right for my account. Yeah, exactly. Some of the long call diagonals, folks, you might not be able to. You might be capital constrained on. I get it, but let me finish here, folks. Let's keep going on our tactic here because we need to talk about adjust and stuff like that. So I'm bringing in $1.45 credit for this trade. Okay, let me grab my ball. I want to keep, folks, when I sell this Ferrari, right? I'm the car dealer in this trade. When we sell this, I want to keep this entire $1.45. I'm getting paid to do this trade, right? If for some reason Amazon starts rolling over and this trade starts increasing in value from, $1.45 to $1.70, $2, something ain't good. Okay. So I have two levels in my trades, ladies and gentlemen. I have one level that's called the adjust level. That means that's the point where if this trade's going up in value, it's a bad thing. Remember this. This going up in value is not good. That means Amazon's rolling over. We want this to go down. We want to put this $1.45 in our pocket and keep it there. If we have to dig into our pocket and start pulling money out and put it on the table, that's the bad thing. Okay, so use that analogy. Is if you have to go into your pocket rooting around, not only to put the $1.45 on the table, but more than that, that's not a good thing. So the adjust level, you know what? Let me start with the eject first. The worst case scenario. I just double the credit that I take in. What's that? $2.90. So at $2.90, if I hop in the elevator tomorrow to go for a run on the beach, and I come back from the run, and all of a sudden this trade is up at $2.90. That's what I call the eject point. That's the point where there's two engine fire lights on in my cockpit. There's smoke in the cockpit, and my wingman's screaming, "Whiz, you're on fire! Eject." That's not the time to start figuring out. You know what? Let me chew on my cigar and put my scarf out the canopy and try and save this airplane. There are times, folks, when I will fly through my eject level. That is a pilot and command decision, folks. That's you as your portfolio manager. You need to make those decisions. When was that? It was this week in one of our trades on Tesla. So on Monday, the great Elon Musk came out with hey, I'm going to make this announcement on Thursday about what I just announced on Monday. So it popped through my eject level. This is why you want to be here, folks, because you're not born a 3,000 hour F-18 guy. You build up those hours, you learn from senior folks. So I'm going to give you my market. When something pops like this, it was Monday, folks, when Tesla popped he's going to announce some cool stuff about trucks on Thursday. Unless he's got something hidden behind the curtains that's even cooler than what he initially said. So there's the pop, and then we're kind of fading. I think this is going to be a sell on the news event tomorrow, to be honest with you. And we keep going down here. This ain't a good looking chart. Implosion and sideways. It's kind of the opposite of this of Amazon, isn't it? Amazon popped and looks good sideways. This dropped and looks crappy sideways. So here's a perfect example of me saying, hey, I'd eject and get out of this trade at whatever it was, whatever the eject level would be. But this is one of those moments where I do chew on my cigar and go, hey, folks, I'm staying in this trade. And for folks who, we'll use the term premature ejection. For you want to have SA, folks, situational awareness. You don't want to just blindly eject out of a trade if you think, again, it's called situational awareness. I'm going to teach you how to fly and fight this airplane. So, for example, with Tesla here, it was Monday. This dude made the announcement that we're doing an event on Thursday. So we hung in it. So there's a perfect opportunity to fly through your eject and stay with the airplane. Roger, XOM trade. I'll talk XOM towards the end, folks. Let me finish this tactic here. Again, this is why we only take 25 slots, folks, is because there's so many great questions and, but whoever just asked, I'll put the link up there. Like I said, folks, if we get rid of all of our annual slots tonight or tomorrow, we won't have any monthlies available. But here's the link, whoever just asked for it. I strongly recommend, even if you're interested in weekly options, you do the annual right here. But okay. So that's the eject point. I double the credit. It's a good rule of thumb, folks. Write this down. You have to come up with your own trade SOP, standard operating procedures. I'm going to give you all mine. When I adjust, when I eject, when I sell front month upside calls in my long call diagonal. I'm going to give you all this stuff. And think of it as a buffet. You're walking up to the buffet and you like those, you don't like that. You take it and you take it and you run with it. Arthur, no, we're in a bearish trade on we're in a bearish trade on Tesla. Bear call spread right here at the 310 strike. So it's hanging. Let me finish with Amazon, folks. So we want this entire $1.45. If I double the credit that I take in, that's the potential eject point. I go inside that though. 75% of the credit that I take in, if it hits that, I don't know, anecdotally, what's that? $2.40, $2.30. That's my adjust point. That's when I scratch my chin and go, let me put Amazon up here. That's when I scratch my chin and go, why is Amazon pulling back? What has changed? Remember, folks, step 3 of the trade plan commit criteria. If at any time during the life of this trade, your commit criteria change, why are you still in the trade? Or why haven't you adjusted it yet? So now the adjust point is that place in the in the life of this trade where I scratch my chin and I go, Amazon's starting to give something back here. Should I adjust this trade? And you ready, folks? Here you go. I'll ripple through this, but again, when you sign up for the 8 sessions, man, we'll stair step through this very, very slowly. There are 4 ways to potentially adjust this bull put spread. Okay. The first one is to close it. If Amazon's rolling over here, there's no reason to have it hit your adjust price, $2.30, whatever, and you go, Amazon's imploding really badly, but let me wait to my eject point to eject. No, sometimes, folks, your adjust point is your eject point where you go, all right, Amazon's rolling over hard. Let's just call it a day. So that's the potential adjustment right there. The first thing is to close it. Okay. We want to avoid that max loss of $5,000. We don't want to, just because I said, hey, I'd be okay with that, doesn't mean I'd be super happy with it. So let's not, so don't get me wrong. The next way to potentially adjust this trade is to maybe roll it down a couple strikes. So you know what, Wiz? Amazon still is hanging up around here, but this 11, where are we? We're down. Ugh. This charting sucks at E-Trade. So here's the 1100 right here, right? So we could, you know what, Wiz? It's hovering around here. Maybe I'm just going to roll it down a couple strikes for the same expiration. So this is called rolling a trade down. We stay with the same expiration, normal December expiration, and we roll it down a couple bucks. Wiz, I'm just going to give myself a little bit more cushion to the downside. I'm going to roll it down a couple strikes. That's the second way to potentially adjust a spread. Just roll it down, give it a little bit more altitude to the downside. So the first two ways were to close the damn trade or to roll it down. You know what, Wiz? I think the 1100 level is right here. I think you're right with your technical analysis and your fundamentals. I just think, as Amazon's given a little bit back here, we might need some more time for it to work. So what adjustment is that? Maybe we roll the trade out. I don't know, to the December 22nd expiration or something. I'm making that up. This is what happens, folks, and this is why you're going to love being a TGO member, is I'm going to teach you the situational awareness. When I brief a mission, if let's say all of us were going to go fly a bombing mission over Syria, right? We're going after Assad or something. I'm going to brief you, hey, these are the 4 things that could happen when we're in the target area, and I'm going to brief you on them in the brief, sitting in our air conditioning, sipping on our Diet Coke, right? So when airborne in the target area, I can go, whoa, this is what's going on. This is the one out of the 4 things that's happening right now. Let's execute this one. So right now, I'm just briefing you on the 4 things we could do to adjust this trade. I don't know which one I'm going to do if it happens. Hopefully, folks, nothing happens. Amazon stays the same, goes up or goes down a little bit, but is above 1100. Okay, so we could close the trade. We could roll the strikes down a couple bucks, or we could roll it out to another expiration. You know what, Wiz? I think the 1100 is good. It just needs another week to work. Now let's cover the last way to potentially adjust this trade is what? To do both. Maybe roll it down a couple strikes and out to a further expiration. Roll it down and out. Does that make sense? That would be the 4th and final way to potentially adjust this bull put spread, which is also called a credit spread. And you don't have to worry about this, folks. I'll send out a text alert during the life of this trade and say, hey, here's what's going on. In my opinion, I'm going to roll this down. I'm going to roll this out. I'm going to close it. So you get a text alert, folks, anytime, or we'll be talking about it as well in one of our live trading sessions. So again, we brief in the air conditioning, sipping on our venti upside down caramel macchiato, and we talk about the 4 things that we could do if something bad happens in the life of this trade. And then we figure out if it happens, which one to employ. We reach into our briefing book and say, hey, Wiz covered the 4 things to adjust his trade. He's going to do this one based on what is going on in the market. Everybody good with that? Big vertical head nod. Those are the adjustments. And again, I can't tell you what they're going to be until we get to it. And as I said, hopefully we don't have to worry about that at all, right? Hopefully we don't have to do any of that stuff. AMZN, let me grab a screenshot of that, 1115, because I'll put that in the replay email for this. Okay, so bull put spread, credit spread, and this is a good, I actually like this trade. This might be our urgent alert for tomorrow. So this is a good trade. It's an actionable trade. It's got a 68% probability using current at the money volatility of at least breaking even. That is a pretty high probability trade right there. Fish, I'm doing the 1085. So Fish has given himself a little bit of altitude, man. The 1090, 1085. So let's take a look at what Fish is doing. For $1.30 or $1.25, yeah, that's still a good trade, man. And look at the metrics. Fish's bull put spread has nearly 3 out of 4 times, folks. 3 out of 4 times you do this trade, it's at least going to break even. Doug, very, very good question, Doug, and I will take your question. Doug said, hey, why not a bull call spread? Doug, you're going to, I don't know if you've joined up yet, you're going to learn something about me. I like being the house. I can't stand debit spreads. Every day you have a debit spread on, Doug, you're losing money. That's not true. Wiz, it's going up. Yeah, well, you're losing money due to theta. When you buy something, when you buy a bull call spread, Doug, in this case, it's a depreciating asset. So, Doug, you know what I'm going to teach you? Here's what I'm going to teach you, Doug, is you could do a bull call spread here, man. You know what I'm going to teach you, Doug? I'm going to teach you a tactic. I'm going to teach you a tactic that pays for this debit spread. So if you want to think about this, folks. Wiz, you don't think Doug's saying, hey, Wiz, could I do a bull call spread? And I'll teach you that. The answer is absolutely yes. So, Doug, if you think I'm right, Amazon is going to go up or languish or just hang out here. If you think Amazon is going up, Doug, what do you also think it's not going to do? Which one? It's not going to go down. So, Doug, I'm going to teach you. That's the top secret tactic. I was waiting to shoot the video today, but Trump kind of kept me at bay with his special announcement, which was crap. So, Doug, guess what? Why don't we use this credit spread and help fund the bull call spread? Ladies and gentlemen, that's some serious foreshadowing there. That is called a double vertical. So, Doug, you could do a bull call spread, but I'd rather, it's right here, folks. Session 6, you're going to learn all about this tactic called a double vertical. A double vertical, folks, to use big SAT words here, it's nothing more than two vertical spreads on top of each other with the same strategic mindset. Does that make sense? It's a great tactic. I can't stand debit spreads, but I love debit spreads when somebody else pays for it. That's the best spread, folks, is when somebody else is going to pay for it. Isn't it? So, Doug, does that answer your question? You absolutely could do a bull call spread, and that's why. Yeah, but guess what? Yeah, Brian, exactly. So, folks, this is. I like the standalone bull put spread. You're going to learn in your double vertical training when we do that session. In order to put on a double vertical, Doug, I need 3 things. You ready for this? I want to be really, really, really bullish or bearish, and I'm not joking when I say this. I need to be 3 reallys. I need to either be really, really bullish or really, really bearish. 3 of them. Otherwise, I don't do that double vertical. In this case, I'm kind of I'm If I'm I just do a normal bull put spread. If this is why, folks, and hopefully we'll talk about this tomorrow morning. This is why with VXX or volatility. Let me pull VIX up. This is why the only times really, folks, that I ever really do double verticals are like now. We put on a bullish double vertical here on volatility and also here, and they both printed money. Now I'm going to get bearish on volatility. I really, really, really think volatility is going to come back in. When? I don't know, folks. They could decide to have, you know what, Wiz, you're wrong. The market is going to go, holy crap, with the tax reform plan, and boom, it's going to stay elevated for a little bit. But it's not going to stay elevated forever. Look at this, folks. Where's the election or whenever it was? Volatility reverts to its mean, folks. We get a holy crap, the market's freaking out, and then we come down. Look at this. This was a month and a half with the VIX below 9, folks, or 10. Look at this. So volatility reverts to its mean. Think of a big salad bowl, okay? The big salad bowl is, you put an orange on the side of it and roll it in the middle. Eventually the thing's going to settle right in the middle of the bowl, right? That's volatility. So I didn't get a chance to hit the gym today, but let me use the workout analogy. I don't know how GE got up there, but volatility being elevated is like me on the treadmill, folks. I can do a 10 incline at 10 miles an hour. It ain't going to be for long. I need to get back down to my resting heart rate. So vol can spike, and we have a good bullish double vertical right now. I think, Diane, you said you were up or closed yours for like $2,400 already. There you go, Diane, with one trade, paid for more than a year of an options weapon school slide. So Diane's doing some good work there. In my opinion, it's time to throw on a bearish double vertical. And again, I'm getting way away from our Amazon bull put spread, but it was a very good question, Doug. Hey, Wiz, why am I not doing a bull call spread on Amazon? You can. I don't like debit spreads. I'd rather put on a bull put spread, which we just did, and have that paid for and do the bull call spread. But like I said, in this specific example with Amazon, I don't have three reallys. I'm not really, really, really bullish on Amazon. I'm bullish. That's why I put on a bull put spread. So, Doug, that was an extremely long answer to your very short question, but does that make sense? Yeah, that was an extended. That was an extended reason, Harry. You're right. I kind of meandered through that one, but that's a great question. I love when people start using their brains, like Doug did, and said, "Hey, wait a minute here. Why can't I do this?" I love that type of question. It shows that you're thinking, and hopefully you love the answer. Good, Doug. Okay. All right. Let's get back to. No, I don't need to do that. So I covered our four potential adjustments on this bull put spread. Close the trade, roll the strikes down, roll the trade out a week or two or whatever, or do both. Roll it down and out. Okay, so I covered the adjustment. I covered the range. We'd want to be filled on. I covered all the bad, folks, right? Now let me cover the good. I'm going to, with a credit spread, ladies and gentlemen, with a credit spread, if I see a 7, 8, or 9 in front of a profit on this thing, it's time to close it. What do I mean by that? If I'm seeing a 70, 80, 90%, you get out of the damn trade, folks. Again, how many of you, so I scared the hell out of you with a lot of the downside talk. Oh, if the world ends, this is what we're going to do with this trade. Let's talk about the upside. When I sell something, if I'm looking at a 70, 80, 90% profit during the life of this trade, I start scratching my chin and going, pigs get slaughtered, folks. Don't be a pig. I asked you all this Monday night. I said, how many of you have been in a credit spread like this? And you said, you know what, Wiz, there's about 5 days left, and there's $300 in there. That's dinner this weekend, man, with my significant other. I'll just let this thing expire worthless. And then, Friday, Jeff Bezos comes out and like I said, he's the Antichrist or something like that, takes his mask off and the stock implodes. Do not turn a 70, 80, 90% winning trade into a 100% losing trade. How do I know that? I've been there. I'm not only the Hair Club for Men member, I'm the president, right? A lot of these SOP folks, my trade SOP, standard operating procedures, comes from me making mistakes like that. I'll just let it expire worthless. And then I wake up Friday and I'm down $5,000. Exactly, Brian, that Apple trade from about 2 weeks ago. It's a great point. So, ladies and gentlemen, always, always, always know when you're going to get out of the trade before you get in it. So I talked about when we're going to adjust the trade if it goes against us. I talked about how we're going to eject out of the trade if it doubles in value, the credit that we took in, and then I just covered the upside. So folks, if I just it's fish. Yeah, been there, never again. Out today for 90% on the SPX trade, no stress. Folks, if you're taking profits every time in a credit spread you're hitting 80, 90%, you are printing money. Remember this, folks. Nobody's ever gone broke taking a profit. John, me too. I was stupid/stubborn about not paying the commissions, thinking it would expire in my favor. Duh. Well said, John. I appreciate you sharing your lessons learned. Raymond, great presentation, Wiz. Thank you, Raymond. And again, this was, look at that, with 2 minutes left. This was, I had 15 minutes at the beginning, opening up the slots and stuff, folks. When you get your options weapon school slot, and we do a bull put spread as part of what is that, session number 4, we'll be talking for an hour to an hour and a half just on these bullish spreads. So tonight I just covered a bull put spread, but to Doug's question, hey Wiz, I will cover bull put spreads, bull call spread. I will cover bullish vertical spreads for about an hour to an hour and a half. And again, I just chose a topic for tonight's sample training that was middle of the road. I could have started with the dinosaurs down here. You know, this is a call, this is a put, but I didn't want to glaze people's eyes over. So Maureen or some of the other folks that are like, hey, is this a basic options program? The answer is yeah, folks. This is your basic. We're going to start with the basics, and we're going to get all the way up to like iron condors and diagonals and all sorts of stuff. Okay. So this is where you need to go, folks. And I haven't calculated it just because I've been teaching. But we're probably in the mid-teens, maybe about 14 annual slots remaining. Okay. Usually when I get done with this brief and I send out the replay email, it starts shaking a little bit of cobwebs loose, and we'll probably hopefully get all the annual slots. And if not, like I said, tomorrow we will open up to get to our full 25. We'll open up some monthlies. Diane, they will never regret joining. Thanks, man. Thanks, Diane. I appreciate that. Okay, let me scroll back and get some of these other good questions. Yes, the number is down here at the bottom of the page here, 754-300-1084. Or you can shoot an email to support@topgunoptions.com. And yes, I am heading to Trade Station. I've got this options weapons school stuff going on here, so I've been a little, that's on the back burner, but yeah, we're absolutely heading to Trade Station. Yes, absolutely. Yeah, and folks, if in doubt, just do the options weapons school plus weekly options. I showed you last week we did our weekly options Amazon bull put spread that made $1,500. Remember, folks, men lie, numbers don't. So there's the trade for last week, weekly options, and it's right there. It was an Amazon. There you go. It was an Amazon weekly bull put spread that made $1,500. Harry, great webinar, Wiz. Always picking up something new. Thanks, Harry. Oh yeah, and Scott. Actually, Scott, it's next weekend. The photo or the interview I did for Inside South Florida. It's next. It's going to air next week, and I'll give you guys a heads up when that's going to be. So good catch. But folks, this is right here. We paid for an annual membership in one trade last week. Okay, so again, hopefully, since you met me Monday night, if you were brand new, you can tell I'm very passionate about what I do. I love this. Even if I wasn't doing this for you all, I would be doing it on my own. So when you make it on Wall Street as a military guy, you put the ladder down. Okay, that's why I couldn't stand Wall Street, man. Everybody make it and they pull the ladder up. I'm like, that's not nice. Put the ladder down, man. Help people. So that's why I'm here, folks. I'm very, very passionate about what I do, and I'm extremely fired up. TGO Wiz is now a SEAL team company. Best of the best. Thanks, Fish. I appreciate it. All right, guys. Went over by about 2 minutes. Any other questions, concerns? Oh, by the way, smart remarks. You can give us a call, 754-300-1084, or you can shoot us an email, support@topgunoptions.com. And like I said, I will be in the live trade brief tomorrow morning at 10 a.m. We're going to do, I might actually, since Doug asked it and it looks like people are using their brains here, we might actually do a double vertical spread. Roger, the ExxonMobil trade, what is the expected hold time on a position like this? Roger, the expected hold time on that ExxonMobil trade is 1.5 years. That ExxonMobil trade, folks, this is a long-term trade. So whether it was JP Morgan or, our long call diagonals, Roger, we closed out a JP Morgan one a couple months ago for a, $38,000 profit in 1.5 years. It averaged about $2,000 a month. So we want to, this is a hold, man. You bet, Harry. I'll see you tomorrow morning at 10 a.m. So folks, the ExxonMobil trade is and the energy sector got hammered today. Who cares? Let me give you my analogy again, folks. I think the last time I got into ExxonMobil literally was probably there, and the market said, okay, Wiz just got in this position, let's implode. I'm not shitting you, folks. I think I recommended it here and it imploded. It was a set, listen to me, folks. The trade, the long call diagonal was down about $7,000. You know what I did? I traded bull put spreads, bear call spreads, iron condors on the front month, and I turned this $7,000 slide into a net $4,000 profit. And I ended up closing it I said, you know what? Let's just get out of ExxonMobil as it imploded. Now it's back in this range, folks. I think that's a great trade, Roger. The expected hold time on that trade is a year and a half to 2 years. That makes sense. I'm going to be selling front month upside calls. I'm going to be trading the front months. Exactly, Brian. I'm going to trade the front months like you read about in Trading the Front Month magazine. Right now, I'd sell some at the money to in the money calls, or do a bear call spread or a bear put spread on Exxon. So even if my Jan 20 position all the way out in time is a little underwater right now, I don't care. That's why I chose January of 2020, folks. This trade's got a year and a half to work, man. So we got plenty of time on this trade. There's the Jan 20s, man. Does that make sense? So yeah, the expected hold time of that trade is a long time. And this, the long call diagonals, folks, they aren't, to use whoever Greg's said, hey, these aren't, these aren't sexy weekly options trades. Weekly options are fun, but they can leave a mark, folks. I mean, for a while there, I sat on the pine for like 2 weeks, taking a break from weekly options just because the market wasn't doing what I thought it should be doing. And whenever you say something like that, like, hey, this isn't doing what it should be doing, you're wrong. The market ain't wrong. The market's doing exactly what the market is doing. It's right. You're wrong. So when you're wrong, you just sit on your hands and you grab some popcorn. Okay. Bob, is there an inexpensive way to do a long call diagonal on Amazon? No, it's Bob. I think if we all chipped in, we could maybe do 5 contracts on a long call diagonal with Amazon. It's just way too expensive. So yeah, so Bob, you know what you do instead? If you can't afford an Amazon long call diagonal, you go with the XLK. This is the technology ETF, folks. So if you can't afford an Apple long call diagonal, Apple is 15% of the XLK. So do the XLK instead, folks. And this is a good proxy for the tech sector. You bet, Bob. You're welcome. Scott, yeah, you might be able to do synthetic stock on Amazon for a hell of a lot cheaper. That's awesome. So why would Bob risk that amount? Sybil, this is why you guys sign up and become members, folks. We have a very interactive forum on our website. It's called the Ready Room. So we get into, here it is right here. We get into the Ready Room and, hey, can you guys take a look at this trade? Can you rip this one apart? Very, very good stuff going on here. We had a good discussion going on about Tesla, VXX, skewing an iron condor. Jason posted this. We have a lot of good stuff on here, folks. Katrina doing a great job providing some mutual support. Great article on Saudi situation and the potential to affect our market. So you're not alone here, folks. You'll be in the live trade briefs with me. I'll be answering your questions interactive, but you can get in here, folks, and start interacting with your fellow traders. If you have a trade that you want to put on and you want to get it red teamed, I call it red team, right? Get it ripped apart. This is where you come. So this is I don't even put a dollar amount on this, folks. The Ready Room, the interactive forum, is a great, it's a great piece of gear. I learned how to fly and fight the Hornet the most from sitting in the Ready Room, folks, and listening to the senior pilots, the junior pilots, my peers. So you're going to learn a lot in the Ready Room. Okay. Oh, there it is, 50. Yeah, this is wrong, folks. And again, I beat the dead horse. We're probably down to about 12 annual slots remaining. It isn't 50, folks. It's 25. I open the amount of slots that I think I can handle. Like I said, there's still a ton of great questions coming across the board here. And when you sign up, I'm going to give you that personalized attention as opposed to having 1,000 people in a trade room. So, okay, guys. All right, I'm gonna render this replay. Here's the replay page. It'll be up here shortly. Grab your annual slot, folks, and I strongly recommend you grab it with the weekly options. Just, even if you're not ready to trade weekly options, just watch. Come to the live trade brief. The weekly options live trade brief is every Monday at 1 o'clock, and it's very tactical, man. I talk about what's going on very tactically in the market, and it's a great service, okay? So I'll tell you what, I'm going to cut you guys loose. There was your vertical spread training for tonight. It's a sample of what you're going to get when you do the real options weapon school. Exactly, Brian. And then paper trade. Absolutely. So have a great rest of your night, folks. Happy hunting. Make sure you hedge, and I'll see many of you tomorrow morning for our weekly options brief at 10 a.m. Okay, you'll get a link 10 a.m. And if we have some, if we still have some slots remaining, maybe I'll open up the month-to-month option. But for now, it looks like we might fill up with all our annuals. We'll see. We'll see tomorrow morning or tomorrow afternoon if I'm going to open the month-to-month. Okay. All right, guys, have a great night. Thanks for coming. I appreciate all the kind words. We got one more live trade brief, and I might do an urgent alert video tomorrow as well. We'll see what the market's showing us, but hopefully everybody's had a great time in our Options Weapons School, industry-leading options training here at Top Gun Options. As you guys know, my new favorite magazine, or blog, the Huffington Post, which I never, my skin's crawling when I say that, but this is, it's good stuff. Good talk recently about Top Gun Options and what we do here. So don't take my words for it, folks. Take your fellow members and take some of these guys. So I saw my message right on me on Arthur. I think so. Let me look up here. Thanks, Fish. I appreciate it. Awesome, guys. All right, I'll go ahead and render this, and I'll get this replay out to you guys shortly. Good night, and I'll see you tomorrow morning at 10 a.m.